Hi traders, and welcome to my video on the Xmaster Formula Indicator. Stick around because in this video I'm going to show you how you can use this indicator to capture moves such as this one for almost 600 pips and counting. So here you can see the MT4 trading platform. This is US dollar, Canadian dollar 1 hour chart. The Xmaster Formula Indicator you can see here displayed on the chart below. I'm just going to run through how to interpret it and how you can use it for trading signals as part of your trading strategy. As I said, this is a 1 hour chart time frame. The reason is I prefer to trade 1 hour, 4 hour daily, weekly, monthly, higher time frame charts as they have more price data, which therefore, in my experience, leads to more reliable signals. That applies when using the Xmaster Formula Indicator or any other technical indicator, price patterns, candlestick patterns, support, resistance, trend lines, etc. It also means less time chart watching. I mean, when you can capture a move like this for around 600 pips, I'm not sure why you'd want to struggle with the 1 minute and 5 minute charts all day long, pulling your hair out, trying to scalp a few pips here and there. Okay, so that being said, you can use this indicator on any chart time frame and any trading instrument, Forex, stocks, cryptos, commodities, indices, bonds, etc. But enough waffling, let's get down to it. So for my strategy, what I do is I trade with the trend. That's the first thing. So we have a clear uptrend here. Okay, and the Xmaster formula. So we'll go through the various aspects of what it can do. So first of all, it can show you the trend. When it's green like this, it indicates an uptrend. Okay, as you can see, Xmaster Formula Indicator is green here, price is moving upwards, and when it's red here, price is moving downwards. Green up, red down. Okay, what I wouldn't do is I wouldn't buy and sell every time it changes direction. You find if you do that, when the market's ranging, you're just going to get chopped in and out of the market. Here, for instance, during this range, I would just ignore the signals completely. To be fair to the line of the Xmaster Formula Indicator, is flat, okay, which does suggest as well that's a ranging market. So you can use it for that purpose to tell you whether the market's ranging or trending, and if it's trending, which direction. Okay, so once that's established, the first thing we're going to look for is we're going to look for the direction of the indicator, and we're going to trade in that direction. Okay, but not just that, okay? The reason I say that is because, for example, here we can see that it's red, okay? So some traders would say here, I'm going to look for sell trades, okay? Just as here they might say, I'm going to look for sell trades. The thing is, the problem with just seeing it like that is you're not looking at the overall picture, and the overall picture is a clear uptrend, okay? So once I've established the direction of the market, I'm going to ignore any signals that go against. So I'm going to ignore sell signals because the market is heading upwards here. So I'm not going to sell. As you can see, if you sell here, price continues up. If you sell here, price continues up. Granted, you may be able to grab a couple of pips on a reversal trade, but I'm not sure why you do that when, you know, the trend is your friend. And by trading with the trend in this instance, we can just make life a lot easier, in my humble opinion. Again, it goes red here, but you don't want to sell because the price is in an uptrend, not just a long uptrend here, but also in the mid to short term, it's an uptrend. Okay, so I'm not going to take signals from the Xmaster Formula Indicator against the overall trend. That's one thing to clear up. Okay, so once we've established the overall trend direction, as I said, is clearly up. You can even use, you know, a moving average if you want for that. I mean, it's not necessary. You can just simply look at your chart and see the direction the price is going in. But if you want to plonk and move an average for extra confirmation on your chart, you can do that and say only take buy trades above it or sell trades below it. The thing is with that is the moving average periods can be open to interpretation, you know, 50, 200, 35, the default 14, which is why for me nothing beats just don't be lazy and mark either higher lows for an uptrend or in a downtrend lower highs, and that's the way I can spot a trend. And you know, you can just visibly look at a chart and see which direction the market's heading. Okay, so once we've established a trend direction, we're going to trade with the trend. And then what you can do, if you insist on using the Xmaster Formula Indicator, you can just wait for a pullback. Okay, so what's a pullback? I hear you say. Well, a pullback is basically when it does go in an opposite direction to the direction you're looking to trade. So we know we're looking to trade long. We're going to wait for the Xmaster formula to go short here, because that indicates on our chart, as you can see here, a pullback. Okay. And when we have that pullback, we're going to wait for it to cross green. Okay. And when it crosses green, aka long, aka buy, that's when we can buy into the trend. So that happens there. Okay, we have another pullback here. It happens there. We can buy into the trend, and you can see these entry points here. Possibly around here as well. I'll just mark one of those because they're around the same level. Okay. Let's go around the first one. This is a limitation of the indicator as well. This isn't personally how I would trade it. I'm just showing you like the basic way to trade it. A few things which I'd avoid. I'd avoid trading when it's too high, okay, because that can mean that the market is oversold, okay? Oh, sorry, overbought. And also, if it gives me an indication, I'm going to first look at the price action, and I don't want to buy at a high, so okay, to be fair, it changed here, which isn't too bad. And it changed here, which also isn't too bad, okay? But for example, if it changes direction at the top of the move, like if it changed, for example, here, okay, you see it changed from red to green. This was technically a signal, but if you actually look at the price, you'd be buying at the high of that move. So always wait for a pullback. Well, that's what I would do, okay? I'm not going to take a signal. Here's another one, okay? It goes green, but if it's around the high, just avoid it, okay? Or if the market's choppy even. Instead, what I prefer to do is to wait for a confirmed pullback and use resistance. So in this instance, that signal would have been avoided. Instead, I would have waited for the pullback, drawn a resistance line, okay? And then look to trade a breakout of the resistance there, okay? Market does make lower highs there. Got a nice wedge formation and a breakout to the upside. Okay, so that's how I would give confirmation. I would confirm the signals is what I'm trying to say. Just like with this one, we could confirm with a breakout either there, this W pattern formation, a breakout to the upside. We could have actually been in earlier, as you can see here, or you could have just used more recent resistance and use that for confirmation around the breakout as well. It's a decent trade. On this one as well, I mean, we could have been looking at this resistance level here. Okay. Just waiting to see how price plays out. And you can see this resistance holds up very well. There. And once price does break above the resistance, it then becomes support, which is a good indication. It's a strong level. And you can see that would have been a good entry point when price continues upwards, which, to be fair to the Xmaster Formula Indicator, it did pinpoint an entry around here. Okay, so that's how I would personally filter the trades with my own confirmation. I'd look for candlestick patterns and breakout support in a downtrend or resistance in an uptrend. So another way you can use it, you don't have to only take trades when it changes color, okay? Because that way you could miss opportunities. Like if you can see it's green, as long as it's green and the market's in an uptrend, we can take long trades. It doesn't mean you just buy at buy willy-nilly at any time. In an uptrend, I'm going to look for resistance levels and pullbacks. I'm still going to wait for my pullback. Okay, got a nice pullback there, resistance level breakout to the upside. Okay, pullback here. Pullback here, resistance level, resistance becomes support, nice entry there. Okay, same here, pullback, breakout above the resistance, comes support, continuation. Resistance, breakout there. So there's ample opportunities whilst it's green, okay, to enter. So we can use it to help filter the direction we're going to trade, but is that really necessary when you can just simply draw your trend line like that? You can see prices trending upwards. All you need is price action with good money management. So money management, talking of money management now, I'm going to cover the stop loss. So let's just say we took, let me just move that one. Let's just say we took the entry on this breakout here, okay? So my stop loss I placed below the low for a long trade, so that'd be around 25 pips here, okay? And then I'm not going to have a fixed take profit level. Why is that? Well, because let's say we had a 3-to-1 risk to reward ratio, and we say with a 25 pip stop loss, we're going to have a 75 pip target. Where's that? So that's here. So that means we would exit here, which, you know, would have looked like a good trade at the time. But now looking in hindsight, we would have left way too much on the table. And, you know, we could have still been in this move, you know, all the way up to here somewhere. So instead, I wouldn't use a fixed take profit level, and I'd move my stop loss in the first instance to break even, and then I just move it below the lows on an uptrend. Okay, so I just keep moving it below the lows. Every time there's a pullback and a continuation, below the lows, below the lows, below the lows, below the lows, until we eventually get taken out. But usually by then, the price would be turning. We would have maximized the move. And as you see the market start to make lower highs, you can consider manually exiting in any case. Okay, that way we can maximize good moves as much as possible when we find them. You don't really want to have a 25 pip stop loss, and, you know, if you only have a 50 pip take profit target, it just makes your life harder, because let's just say you had a 20 pip average stop loss, you took 3 losses, you're down 60 pips, but you catch a big move like this for 500 pips, you know, you're going to be up, you know, 440 pips overall, minus broker fees. So that's the importance of money management. You know, we like to cut losing trades short and let winning trades run, trailing profit. And you can, of course, close part of the position as well. Okay, if you do have to re-enter, if you get taken out early, you can see there's ample opportunities to re-enter. You just don't want to buy too high, or in the case of a downtrend, sell too low. One thing I wouldn't do is keep popping in and out of the market. I just look for one good trade and just ride the trend as much as possible. Just apply the same concept here. Okay. So you can see a nice breakout of this, nice breach of this support line here, M pattern formation. This support then becomes resistance, ample opportunities to enter on the way down. Okay, nice entry there, wedge pattern formation, M pattern, breakout to the downside. Okay, if you missed that, just hop in on the next one. Okay, stop loss above the high, above the high. If we took a break, let's just say we waited for a breakout there, then we've got this strong level of support here. Okay, so this would have been a good entry. That support then comes resistance, continuation, ample opportunities to enter. And again, let's just say you took this trade here, you waited for confirmation, conservative entry, stop loss above the high, 20 pips. Okay, I mean, 220 pips profit. Not too bad, using a trailing stop on the way down, above the high, above the high, above the high, above the high. And if you get taken out around here somewhere, you make a profit. You see the market make these lower highs and higher lows going in the opposite direction, can look to get out. So the Xmaster Formula Indicator on this particular downtrend, let's take a look. Yep, it was red. Okay, turned green, turned red again. You would have looked at the chart. Perhaps I wouldn't have just jumped in. I would have drawn the support level. So I'd be waiting for a breach, ideally, of this support level first. Okay, before taking an entry. Same in this instance. It goes green, suggests a pullback, but we want to wait for a breach of the support level, which is here in this instance. And this is a good entry simply because we've confirmed it by a breach of support. The indicator has changed direction at the same time and we are good to go. But as I said, the indicator doesn't always need to be changing for an entry to be valid. There's a nice breakout entry there. The indicator is already red. This one's a good breakout trade here, actually. You know, we had a clear pullback. Clear pullback, M pattern formation, good strong breakout to the downside. Lots of traders were obviously watching this particular setup here. The Xmaster Formula was already red, okay, so that was our confirmation if we needed it. We obviously had our lower highs, wedge pattern formation, a good breakout to the downside, lots of bearish price action as well. And then remember, you don't want to sell too low. The indicator's all the way down here. Okay, as the price has already moved, if we zoom out, already had quite a significant move there. You don't want to sell at the low and get caught in a bear trap. There you go. So hopefully you have an idea of how you can use the Xmaster Formula Indicator. Divergence as well is worth pointing out, but it's basically like the lines you drawn on the chart. You just, you know, if you just mark your lower highs, tell you that the market is down. If you mark your high lows, tell you that the market is up. Once we know the direction of the market, you can also use that to exit a trade as well. if you like. Okay, so say for example you did get in around here and then you saw the lower highs here, you might consider exiting around here. Although the trend has somehow continued up here. Okay, so if we just zoom in on this current scenario here, see how we could have played this. I mean, that's quite choppy price action. Probably want to wait more to see what's going to happen up here. That being said, we do have a clear level of resistance that's been breached. As you can see, that big candle there is obviously traders are watching this particular level and anticipating that to happen. It did happen with some force as well. Market is making these these higher lows. Lots of bullish indications there. And a breakout. And of course, the Xmaster formula is green. But remember, I don't like to take them in range in markets. So by the time we were, certainly around here somewhere, you see all this choppiness, we just want to avoid it. Wait for a clear breakout in the trend direction and then look to take entries in the direction that the Xmaster Formula Indicator is suggesting without buying at the high. Okay, so it'll be interesting to see how this plays out. Perhaps wait for a deeper pullback and a continuation or a reversal to the downside. Okay, bear in mind this is my interpretation, how I would trade with the Xmaster Formula Indicator. Obviously, it's not going to be the same for everyone. If you do want to use it, please always demo trade to begin with and see how you get on. And have perhaps the most important but overlooked thing is to have good discipline. Don't let negative emotions like fear, anger, and greed get in your way. Don't revenge trade. Don't overtrade. Don't force trades that aren't there. Don't have FOMO, fear of missing out. Let's say you see this downwards move here, you see the Xmaster indicator is red and you want to sell. You don't want to sell at the bottom of the move like this. You're just going to end up selling at the low. That's a bear trap. People are, those who sold earlier on and taking their profits, those who sell late are going to get their stop loss taken out, and it's just going to cause this big shift of momentum to the upside. Okay, I do have videos on bear traps and bull traps that you might want to check out. And yes, just to emphasize as well, remember I was saying that you don't have to wait for the indicator to change color as an entry. If we switch to the 4-hour chart, probably give us a good example of why not to do that. Okay, so obviously I'm going to have to try and delete all of these off the chart just so we don't get confused with the 1-hour chart. Just bear with me a second. Okay, just delete. It's interesting to see how they compare if you're doing multiple time frame analysis, but we'll save that for another video. We'll just focus on the point I'm trying to make here, which is the Xmaster Formula Indicator doesn't need to change direction for it to confirm an entry, okay? Because it does look like in hindsight, okay, if you would have taken it there, it would have been a great trade, right? But then there will be instances, as I showed you on the 1-hour chart, when it's just chopping and changing direction and you're just going to get chopped in and out of the market. So you can, provided it is the color of the direction of the way we want to trade, you can still use it. So let's just say you want to trade there, this breakout here of that resistance level. It's green, it gives us our confirmation. Happy days. Pull back here, breakout above, it's green, confirmed. Okay. Pullback, breakout, green, confirmed. Okay. Pullback here, breakout, green, confirmed. Big pullback here. Interestingly, the indicator stayed green. Okay, we have our pullback, breakout, confirmed. Okay. Then, as I said, once it gets too high, we might want to consider waiting to see what happens. You don't want to buy at the high, same as you don't want to sell at the low down here. Okay, you can just, if you just time your entry good at the start of a trend, you can capture big moves. Like look at this one, over 500 pips with just good timing and using the Xmaster formula to help you gauge the trend direction. And to be fair to the indicator, looking at it now, I can see how it could be good for considering when to perhaps exit. Okay, I can see value in that. you know, if you were in a trade, if you had just, you know, you saw this downtrend playing out and you wanted to, you know, you wanted to get into this downtrend and you just waited, okay, breakout, nice breakout of resistance here, you could have gone in. Same along here, strong level of resistance, big breakout, it's red to confirm. Another one here, nice pullback, breakout, big breakout candle there. Traders are watching these levels. Okay, and it's red all the way down. But then once it turns green, if you were in any of these positions, that might be when you're thinking of taking your profit. So it can be good for exiting as well when it changes color. You can also see the higher lows. You can be thinking about getting out of your sell position then, and also the trading stop may have taken you out prior to that, trading stop above the highs on the way down. But let's just say this is an aggressive entry. Okay, let's just say you took the more conservative, you waited for the trend to form, then the pullback, and you took this entry. You know, over 250 pips profit potential. Okay, so that's the various ways to implement the Xmaster formula as I see it. Okay, if somebody else sees it differently, that's up to them. Hopefully you found something useful in this video, whether that's in terms of price action, trade and money management, or the indicator itself. If you can like and subscribe, that would be great, and I hope to catch you on the next one. Take care.